what's going on, YouTube? Today we're coming back with a little interesting video. So it's gonna be short, but I want you guys to pay attention because it's something that I know will help you guys use this whenever you try it and trade one of the regular pairs that you trade every day. So in this particular case, you have oil on the left side and we have USD-CAD on the right side. As you guys can see, they are correlated to each other. On this particular case, they have a negative correlation. So what I mean by negative correlation means is that whenever oil start going down, you're gonna see USD-CAD going up. So whenever oil goes down, you're gonna see USD-CAD going up. And the reason why that happens is because if you guys don't know, Canada supplies almost 38 to 40% of the oil to the United States. So whenever anything is affecting the oil industry, it's also gonna affect the oil. So it's also gonna affect the other peers, and you also can take advantage of that by knowing that whenever oil goes down, you're gonna see USD-CAD going up. So if I know that, let's say something's gonna affect this week oil, so I automatically come to USD-CAD in case I don't want to trade oil. Instead I want to trade a regular pair, then I come to USD-CAD and trade the opposite of what oil is doing. So if oil is going down, I'ma buy USD-CAD. If oil is going up, on this particular case, oil is doing a little retracement to go back up. On this particular case, I'm gonna start looking for sell on USD-CAD. And the reason why is because they correlate almost 80% of the time. So that means that if they make exactly the opposite move 80% of the times and they move together, so every move that they make the move together, then on this particular case, I'm gonna start looking for sell. So I'm gonna start looking for sell around this area over here. And you guys already know the reason why I'm gonna start looking for sell over here is because if I know that oil is gonna start going up after a huge downtrend, if oil start going back up, then I'm gonna start looking for sell on USD-CAD. So by knowing these little things like this, I think the next time you trade USD-CAD, you're also gonna look at oil. On this particular case, you see how they both correlate. So you see both say the same thing movement over here. So you're gonna see the same move, and when every move happened, on this particular case, this huge drop over here happened on oil, and the next thing you see is a huge gap on USD-CAD. So by you knowing these little things over here, I know for a fact the next time you trade USD-CAD, on this particular case, this pair to the right, you're also gonna look at what is oil doing. So by you knowing that they correlate on a negative way, that means that whenever oil goes down, you're gonna see USD-CAD go up. So if you see that we have a perfect clear downtrend from up here to down here, and you see that oil is gonna start going down, then I'm gonna start looking for buys on USD-CAD. So I know this is something that not a lot of YouTube teaches out there. It's an information that should be easily learned at your beginning phase of your trading career. But I know that it's difficult because not a lot of YouTube show you this, and this is something so little, so simple that all of you guys should know about this information. So we're gonna go on to the next one. So we're gonna go up to some of the pairs correlated with gold. So I know gold is it's a pair that a lot of people trade, and therefore if I know that a lot of pairs a lot of people trade let's say gold, which is this pair over here to the left, and we're gonna correlate it, let's say with let's put over here to the right AUDUSD. So we're gonna put AUDUSD to your right, and you're gonna see that obviously oil, gold and AUDUSD has a positive correlation, which means now we went from negative correlation to now a positive correlation. Positive correlation means that they're gonna move on the same direction as as the other pair. So if gold goes down, you're gonna see AUD going down. So whenever gold goes up, you're gonna see AUD going up. So I think, you know, this little information is obviously is gonna take the way you look at, you know, some pairs to a whole different level. For the next video, I'm gonna have more pairs correlated with oil, gold, and we also gonna include their US 30, so the Dow Jones. So in this particular case, we have gold and AUD to the right. So as you can see, whenever, you know, gold started going down, AUD to the right over here started going down as well. Whenever we saw this huge dump to the downside, we saw a little move to the downside as well. Now it's not gonna make exactly the same move. By correlation means that they're gonna move on the same direction. It doesn't mean that it's gonna make exactly the same move, but if it's gonna, but it do gonna make, it's still gonna move on the same direction as the other peer. So in this particular case, we saw that gold is starting going back up. We saw also AUDUSD going up to the upside. On this particular case, you know, gold found a resistance up here and it started descending to the downside over here, creating a downtrend on the 4-hour time frame. And we also saw exactly the same move on AUDUSD. So I know by knowing this over here, the next time you trade AUDUSD, you're also gonna be looking at gold and seeing what gold is doing. On this particular case, if I know that gold is creating a resistance over here, and at any point if it touches that resistance up here again, if you know that it's gonna start going down, then you possibly can start, you know, selling USD to the downside again. So by you knowing little things like this is the way that you take advantage of trading, and, you know, having a little knowledge about why one currency is going down and why this one is going up is gonna help you a lot. So let's put another example on correlated pairs with gold and another pairs that, but at this time we're gonna put two examples that one is gonna go up and the other one is gonna go down. So we're gonna put here, let's say AUDCHF. So AUDCHF. So AUDCHF has a negative correlation with gold. So whenever you see gold going down, whenever you see gold going up, in this particular case found a support level over here, started going up, then we saw that, you know, USDCHF started going down. So this huge move over here, on gold to the upside created this huge move on USDCHF to the downside. So by you knowing little things like this, because sometimes gold is gonna move before, so it's gonna make the move faster than a normal pair. So you might be ahead of the move before it actually happens. So by you knowing that gold is on a possible right here, so gold is on a support level over here, and you see that at any moment it's gonna start going up, you can possibly start selling USDCHF at the same time and make money while gold goes up, because they correlate 80% of the time. So the reason why gold and, you know, USDCHF you know, they're correlated to each other is because, you know, more than 25% of, you know, Switzerland money depends on gold reserve. So that means that, you know, obviously they gotta be correlated with each other if the Switzerland country is also depends on gold. So wherever move happens on gold, it's gonna affect the USDCHF as well. So, you know, I hope you guys like this video. We're coming back with more correlated pairs, and, you know, little things like this that's just gonna take your trading knowledge to a whole different level. I know that this is something that, you know, you should know from the beginning, but I know that a lot of pro traders, a lot of advanced traders and beginners don't know about this. So that is why it's a good information for me to put out there, since I know that a lot of people still don't know the basics of this. And, you know, we're coming back with the next video on more correlated pairs, USD, US30, Dow Jones correlated pairs. And, you know, stay tuned for the next video. See you guys.